Hello and welcome to our SACS webinar, Preparing for COVID-19 Recovery Loan Options and Forgiveness Strategies. It's April 22nd, 2021, and a beautiful day. A little chilly, but you guys need to go out there, get some fresh air. So yes, this webinar is powered by SACS LLP, that's the accounting, tax, and advisory firm, SACS Wealth Advisors, sacswa.com, and our technology company S2 Solutions, getting all your technology needs met. And here's our slide. We show this every time. It is our disclaimer, basically saying that this webinar presentation is for general guidance only. That's right, general guidance only means that you need to consult with your professional advisor to give any specific questions or issues that you're coming up with, but know that we're always here for you. You've been reaching out to us through our emails, and also we've had some calls with you, so don't be shy, and obviously we'd love to talk to you. All right, let's talk about CPE today. So remember, folks, that we have to go a certain amount of time in order to get CPE, but we decided to do the polling questions regardless, so that if we do hit the 50-minute mark, we can give you one credit of CPE. But know that there's some other additional things that you need to do if you really want CPE. Number one, you need to stay on for the entire presentation, at least to answer all the polling questions. And we need to get to 50 minutes in order to give you one CPE credit. Also, so you do need to answer 3 out of the 4 polling questions besides staying on. You do need to also complete that lovely evaluation form that you know is in the handout section. And you need to stay engaged. So, you know, walking away and just not being engaged at all in the webinar. And we do have a tracking device. Yes, so do those things and you will earn hopefully 1 credit of CPE if we go 15 minutes today. Here's our lovely team of presenters, myself, Josh, Steve, and the lovely Gina Perrone, who's with us today. Now, Josh is actually on vacation, and we're not going to tell you where he is because that's one of the polling questions, but I did speak to him this morning, and he was very happy that we did not eliminate him from the presenters' photos. So, Josh, you are with us, even though you're not present with us. Here are our presenters, but this is our recovery task force. Angelo, Melissa, Amanda, Julia, and Matt. They're behind the scenes working to get those PPP loan application forgiveness forms done, as well as answer questions, and working as well on the employee retention credit. Today's agenda, the introduction, we can cross that off. We've done that. Ppp Loan Statistics, I'm going to speak about, and the wonderful yet scary loan necessity questionnaire. Gina's going to speak about employee retention credit notice 2021-23, the American Rescue Plan Act, and Steve's going to talk about funding opportunities, cross-funding program eligibility, the Restaurant Revitalization Fund, and the Shuttered Venue Operation Grant. All right, let's start off with our very first CPE polling question. Where is Josh Shenani vacationing today? Is he in his backyard, which is a pretty big backyard, so that's possible. Did he go to Maine? Did he go to Disney World, or is he sitting on deck in his shorts in an Alaskan cruise? So is it staycation, Maine, Disney World, or an Alaskan cruise? I will let the polls open and start polling your polls. I'm going to make sure that we have enough people polling on this. I'll give you a little bit more time. So where is Josh? It's like, where's Waldo, but it's where's Josh? Staycation, Maine, Disney World, or an Alaskan cruise? Give you a little bit more time to vote. as the seconds pass by. I want to get up to at least 80% before I close you out. And obviously, this is a relatively easy question if you know Josh Shenani. Okay, 5, 4, 3, 2, 1. Let's close out this polling question. And 22% said he was in his backyard. 27% said he was in Maine. 50% in Disney World, and 2% said he's on an Alaskan cruise. So if you did select Disney World, he is definitely in Disney World. And we told him this morning we were going to dress him up as Donald Duck in the photo presentation, but we didn't have time to do that. It'd be very shocking to see Josh anywhere that's cold. So Alaskan cruise and Maine, that one I think you should have known better. PPP loan statistics. Let's give you the latest statistics. This is fresh off the press. You can see that we're looking at by industry. We're looking at industry. It looks like the accommodation and food industries, by the way, this is as of the beginning of the year, it has the largest loan count. About 16% of the loans are in that industry, followed by 13% in construction and 11% professional, scientific, and technical services. So this is as of the beginning of the year, who's taken out the PPP loans, 1 and 2. Now, as far as the loan size, that hasn't changed that much as far as the dynamics of this. If you're looking at this, most of the loans are $50,000 or under. That's 25.8%, followed by, between 50 and 100. And very few loans, and the loan count under 1,000 are over $2 million or less than 0.5% or 0.8%. And as far as the top lenders for PPP 2021, looks like JP Morgan Chase is still winning with a lot of money out there. 147,000 or 148,000 approved loans, followed by B of A and also Capital Plus Financial LLC. So those are the big players, although you can see it spread out after Cross River Bank to a number of different other banks. We wanted to go through this wonderful journey with you, just maybe if some of you are distressed because you've submitted your loan application to your lender, you're asking what's going on, and just know that there have been some issues. We've been hearing that the lenders have some problems with things being denied, that as the SBA is trying to validate things, there's some issues, some error codes that are coming out, and validation errors that are coming out. And just in general, we'd like to hear from you what your bank, your lending group is doing, because some of them are still shut down. Many or most of them are open for business. But if you have a loan that's over $2 million, just expect it to take a long time, folks. So we're getting there, but we're not there yet. So this is the PPP application journey. All right, let's talk about the all too familiar and quite scary loan necessity questionnaire, for-profit and not-for-profit. Now, I just want to point out to you that the two forms, the 59.0, just turn the slide because I can't say the numbers. The two different forms, one is for a not-for-profit and one is a for-profit. They are in your handouts, and just be aware of them because we are going to cover these two areas kind of as an overview. I'm not going to be focusing on every line. Kind of talked about that as a group and felt like it wasn't really necessary to do that at this point. But I want to cover both the for-profit and not-for-profit loan necessity questionnaire and just kind of point out some snags or some things you just need to be aware of First, there are instructions on this form. And in the instructions, you're going to find that there's actually in the form, you're going to find there's two sections. That's the business activity assessment section and the liquidity assessment section. Now, when you read the directions, you'll see that the reason you need to fill out this application or this questionnaire if you received if you received $2 million or more in a loan, what we're being told is the SBA is using this questionnaire to validate or to kind of check out when you first applied for the loan if you should have applied for the loan. But also in the text of the instructions, they're saying, well, just because you fill out this questionnaire, we're not challenging the loan, but we want to keep everybody honest and make sure that taxpayers' dollars are being used properly. So we're requesting you to fill out this questionnaire. So now know that you will have to fill out this questionnaire if you've received a loan of $2 million or more. And some things just to note in the instructions, you'll see here that in the different sections, you are required to provide support for your answers. So I listed out here which questions you need to provide support for, and some of these we are actually going to cover the questions. And the other area which I guess people are getting confused by is you'll see a checkbox as to whether or not the information in the questionnaire is typically confidential to your organization. That doesn't mean that, if you check the box, yes, it's confidential. It doesn't mean that therefore you don't need to report it to the SBA. They want you to report it regardless. They just want to know whether or not the information is confidential. And also know this, that the SBA may request, and I'm going to go out on a limb and say they probably will request additional information, supporting information as they review your loan. So we picked certain questions just to kind of highlight, and I'm going to do my best to explain why this is important, but understand that as you're checking boxes yes in these questionnaires, it's probably, and besides checking yes, and you've got to quantify and provide support, it's probably because the SBA wants to know whether or not you really should have taken a loan out in the first place. So hopefully I made that clear. Just my statement that as you're checking boxes, yes, I'm not saying that that means that you shouldn't have received a loan. I'm just saying that that's going to be, a matter that they're going to be looking at more carefully. So I want to cover, and this is the for-profit questionnaire, 2A and 2B. I'm going to read it, discuss it, especially in the second slide, and then we're going to go on to another question. The question is, between March 13th, 2020 and the end of the loan forgiveness covered period of the PPP loan, has the borrower paid any dividends or other capital distributions other than for pass-through estimated tax payments to its owners? So that question basically, if you are a S corporation or a C corporation, is going to be answered a little bit differently if you think this through with me. Now notice that they're basically asking the question as to whether or not there's been any dividends or other capital distributions paid from that period of time through the end of the loan forgiveness period. And if you have paid out capital distributions or dividends that are not considered to be pass-through estimated tax payments, you are going to check that box yes. And then you are going to, in B, pretty much state that if it's yes, they want to know how much in the covered period from March 13th to the covered period that number was. So remember, yes means, hey, let's get into the information a little bit more by the SBA. Now, if you could turn to the next slide, Maggie, just wanted to point out, if you think about it, an S corporation, is a pass-through entity. You can get salaries. In partnerships, you can get a guaranteed partnership payment. But now trying to determine whether or not these distributions are wages or they are distributions is going to be a little tricky. So we put in here this footnote, which is on the questionnaire, just to highlight it, because the exception for distributions is estimated quarterly tax payments. And this is the way it's defined. This is the exception, the safe harbor, which is the JS interpretation. The safe harbor is the tax liability on profits earned in the first 3 quarters of 2020, or it could be 110% of the pro rata share of last year's tax liability on distributions, and or 100% of the pro rata share of tax liability on the total distributions in 2020. That's the exception to the rule. So let's talk about what the point of this is. Number one, there's really no other clear information out there to explain what this all means. But if you consider this is through your covered period, if you had larger distributions towards the end of your covered period, maybe you should be considering whether or not when you're filing for forgiveness, that covered period should be in a shorter period if you can get full forgiveness. So next slide. If it's not distributions, it's going to be something else. It's going to be compensation. So question 5A, during the loan forgiveness covered period of the PPP loan, were any of the borrower's owners who work at the borrower compensated by the borrower in an amount that exceeds $250,000 on an annual basis? So this is straightforward. If you receive payroll as an owner, but partners normally have guaranteed payments, but they don't normally have salaries. So you've got to really kind of look at this carefully, because the compensation is either compensation or it's a distribution, and you want to be able to answer this question no, if you can, because if not, you're going to provide a whole bunch of information. And again, this is about the loan necessity questionnaire. Now, everything that I said, I'm probably causing some people to be confused. That's why we take questions, and you can reach out to us. Hopefully we can clarify this a little bit more. The last question, which I think is important, is number 13. In number 13, you're going to see that this provides for additional comments. Now, some of the things that you might want to put in the additional comments, and by the way, it's 1,000 character max, which is 120 to 180 words, is you can put down in that to explain why you need a loan, your contingency plans to lay off or furlough employees if the loan was not received, anticipated capital expenditures that were scheduled to be incurred in the cover period, but you did not do it, uncertainty regarding the ability to operate remotely, anticipated issues with significant clients or interruption in your ability to provide services, products, and concerns regarding supply chain. So you do have the ability, 120 to 180 words, 1,000 character max, to also help the SBA know that you really did need the loan at the time that you applied for it. Next slide. So this is the for-profit, we discovered this is the not-for-profit, and it's pretty much the same as the for-profit. So we're going to skip through this one to the next slide. I wanted just to point out a few things for not-for-profits. They are different than for-profits, and the questions that are being asked are similar for for-profits, but not exactly the same. So yes, as you see on this slide, they want to know who received $250,000 on an annualized basis. They want to know the number of people and the total. They also, it's interesting on 4A, they want to know if you had any restrictions on your net income, cash savings, and temporary cash investments for payroll and other costs. They want to know, and you'll see if you went through the questionnaire, there's a lot of questions about what your cash position was, what your investments were. just before you applied. And I guess in this question, they want to know, hey, were there any restricted investments or cash that you couldn't have used for payroll? Next slide. And if you answer the question yes, then you can kind of, again, 120 to 180 characters, words, tell them what that was. Did you receive any funds from any CARES Act program other than PPP, excluding tax benefits? So again, this is any of the funds that are included in the CARES Act. And if that is the answer to that is yes, then you need to cite the program. So this perhaps is the money that came from HHS or EIDL. So you do need to state what those were. And this is actually a question that's in the for-profit questionnaire as well. Next slide. And finally, you do get to do some more explaining as to why you needed the loan. So that kind of is a quick overview of the questionnaire. We are here to answer questions. I know that there is perhaps some confusion out there, so let's talk. Next polling question, where did Saks fall in accounting today's 2021 top 100 list of accounting firms in the country? So this is the latest version. Was it 95, 96, 97, or 98? Let's go to the polls and find out where did we rank 95, 96, 97, or 98. So I guess that's sequential in the country on the top 100 list of accounting firms. Looking at the percentage of people voting, and I give you a little bit more time to vote. And the numbers are creeping up. Let's see who actually reads their emails and our e-blasts. 95, 96, 97, 98. Keep going, gonna wait until we get up to 80%, and then I'm gonna close out the poll for those people who really do want to get CPE or just love to answer polling questions. Some of you have told me we don't want CPE, but we love to answer your polling questions. 95, 96, 97, or 98. And I'm going to count down. 5, 4, 3, 2, 1. What did you say? 45% of you got it right. We are now number 95 of the top 100 accounting firms in the country. So at this time, I'm going to pass the microphone to Gina, who's going to tell us everything you wanted to know about employee retention credit, but we're afraid to ask. Gina?
Thanks, Todd. So the employee retention credit. In the beginning, you had a choice of receiving a PPP loan or claiming the credit. This changed in late December 2020. Now, employers who received a PPP loan can also claim the employee retention credit. However, you cannot double dip, meaning you cannot use the same dollar of wages for PPP loan forgiveness and also use it for the credit. Now, you can claim the credit retroactively from March 13th, 2020 through December 31st, 2020. And they also extended it for the first 2 quarters of 2021. And then they extended it again for the last 2 quarters of 2021. So I will compare the rules for 2020 versus the first 2 quarters of 2021. Though the concept and the calculations are more or less the same, some of the rules change. So for both 2020 and 2021, to be eligible for the credit, you have to meet one of 2 requirements. One is you have to experience a full or partial governmental shutdown of operations. The second is you need to experience a significant decline in gross receipts. How do you know if you experience a gross receipt reduction? Well, for 2020, you're looking for a 50% or more reduction in gross receipts for any quarter in 2020 compared to the same quarter in 2019. Compare that to the requirement for 2021, where you're only looking for a 20% reduction in gross receipts in a quarter in 2021 compared to 2019. The credit in 2020 is equal to 50% of up to $10,000 of wages per employee. That means you can get a maximum credit per employee in 2020 of $5,000. For 2021, they enhanced the credit by allowing you to take 70% of up to $10,000 of wages per employee per credit. That means you can get $7,000 of credit per employee per quarter. So for just the first 2 quarters of 2021, you're looking at a $14,000 credit. Next slide. So what are qualified wages? Well, qualified wages are gross wages and also includes health insurance premiums paid by the employer on behalf of the employees. So for 2020, small employers were able to use all wages paid to employees, but large employers could only use wages paid to employees to not provide service. For 2021, the same rules applied. However, the definition of what is a small employer changed. So for 2020, if you had 100 or less full-time employees in 2019, you were considered a small employer, and all wages paid to all employees were eligible for the credit. If you had more than 100 full-time employees in 2019, then only wages paid to employees to not provide services counted for the credit. For 2021, like I said, they enhanced the credit, and now employers with 500 or less employees in 2019 can claim the credit on all wages paid. Any employers with over 500 employees, again, could only claim the credit on wages paid to employees to not provide services. Next slide. So now the fun stuff. So Notice 2021-23 was released in early April of this year. This notice provides guidance on the employee retention credit for only Q1 and Q2 of 2021. The notice provides an election to use a prior quarter's gross receipts to determine whether there is a 20% reduction when compared to the same quarter in 2019. For example, suppose you're testing the gross receipts for Q2 of 2021. You would compare the Q2 gross receipts to the Q2 gross receipts in 2019 to see if you have more than a 20% reduction. If you do not, you can now elect to look at the prior quarter. So you can now test Q1 2021 to Q1 of 2019 to see if you have a 20% reduction. If you do, then now you qualify for the credit for the second quarter 2021. And under this example, you would also qualify for the credit for the first quarter 2021. The notice also provides that if for new employers not in existence at the beginning of a quarter in 2019, you can compare the 2021 gross receipts to the same quarter of 2020. So you basically, instead of comparing 2021 to a quarter in 2019, since you weren't in operations in that quarter in 2019, you would just compare it to the same quarter in 2020. Notice 2123-23 also provided a 70% advance rule. Now, employers can now elect to receive an advance payment of the credit of up to 70% of the average quarterly wages paid in 2019. And to determine the average quarterly wages, you would simply look at the 941s filed. However, you're still required to reduce the deposits before electing an advance. And this advance is only open to small employers, which are employers with 500 or less full-time employees in 19. Next slide. The American Rescue Plan. So the American Rescue Plan was signed into law on March 11, 2021. This plan made 3 changes to the credit. First, it extended the election to use the prior quarter's gross receipts to determine if there's a 20% reduction. And again, that goes back to my prior example where You could test Q2 gross receipts by looking at Q1 gross receipts. Second, the American Rescue Plan also expanded the credit to remove the 500 employee limitation on qualifying wages to severely distressed employers. Now, what's a severely distressed employer? It's one with a more than 90% reduction in gross receipts when compared to the same quarter in 2019. This expansion only applies to Q3 and Q4 of 2020. So by being classified as a severely distressed employers, you can have more than 500 employees and still all wages will be eligible. The third change is that the plan expanded the definition of eligible employer to include recovery startup businesses. Now, this type of business started after February 15th, 2020, and has $1 million or less of gross receipts. A recovery startup business can claim the credit up to $50,000 per year, and this new eligible employer now qualifies for the credit up to $50,000 per quarter for Q1 through Q4 of 2021.
All right. Thank you, Gina, for that compelling information on the employee retention credit. It's a large and significant benefit, so hopefully most of you folks out there are able to take advantage of it. So I'm going to be discussing the Restaurant Revitalization Fund as well as the Shuttered Venue Operator Grant. But before I do so, just wanted to post this handy chart, and I know some people are asking, the slides will be made available, the recording will be made available, so you'll be able to see this. But this chart just gives basically eligibility for each of the funding programs, that the main funding programs that the SBA has put out, and talks about how they impact each other in terms of, are they mutually exclusive? As employee retention credit's not on here, but as we knew from before, PPP and employee retention credit used to be mutually exclusive. That's no longer the case. But some of the programs, as you can see, are mutually exclusive, meaning you may not be able to get both. So I think this chart provides some good information if you are considering applying for more than one of the programs that are out there. So before I do get into the next round, I'm going to turn it back over to Todd for a polling question. Todd?
Hey, thanks, Steve. Polling question number 3. So today is April 22nd. What's so special about April 22nd? Administrative Professionals Day, the first Earth Day, World Book Day, World Intellectual Property Day, which sounds pretty exciting to me. So get your votes in, and once we get to the right percentage, I'll close it out. If you're looking for CPE today. So what's so special about April 22nd? I'm not quite sure what World Book Day means. I guess that means you need to read a book or something. I don't know. Okay, we're almost 51%. Keep on plugging in what your answer should be. Administrative Professionals Day, the first Earth Day, World Book Day, or World Intellectual Property Day. Give you a few more minutes. I'm sure that people right now are consulting Google, who knows all. Close it out. 5, 4, 3, 2, 1. If you said it was the first Earth Day, you were correct. It's 81%. All the rest are wrong. Good to see that no one chose World Intellectual Day. Steve, back to you.
Thank you, Todd. Okay, so now I'm going to talk about the Restaurant Revitalization Fund. This is a very important and very large or significant funding source. We're waiting for the portal to open. It's not quite open yet, but it is anticipated shortly, I think within the next week or so. As of now, there's $28.6 billion in funding. It's administered by the SBA, $5 billion of which is earmarked for small entities with 2019 gross receipts of $500,000 or less. So if you think about that, There's 28.6 billion, which seems like a significant sum, but when after the first 5 billion is earmarked for these smaller entities, if you will, it's not that much left. So especially when you consider that relative to PPP. So let's hope, if need be, that there are additional funds that are available. So there's a grant amount up to $10 million per eligible entity, together with your affiliated businesses. The maximum is $5 million per physical location. The minimum is $1,000. So if your grant is going to be below that, you will not be eligible. The affiliated entity rules have been modified for purposes of this funding, but if you own or operate more than 20 locations, you won't be able to take advantage of the funding from this program. And you see the definition of affiliated entities right there. So on to the next slide. These are the entities that are eligible: restaurants, food stands, food trucks, food carts, caterers. We see saloons, inns, and whatnot, and basically similar places of business where people gather primarily for the purpose of being served food or drink. So you'll see the rules are not final yet. A draft of the application is posted in our chat box, so you can take a look at that. If you do think this applies to you, it's definitely worth at least getting the application, taking a look at it, and making sure that you can answer the questions. As I was saying before, there are kind of prioritization windows as well. So the first 3 weeks, women-owned and veteran-owned businesses, as well as socially and economically disadvantaged small businesses will receive priority, and then the funding will be opened up to the rest of the eligible public. Okay, so in order to qualify, basically the funding will be the reduction in your gross receipts from 2019 to 2020, and it's going to be reduced by any PPP loans that the borrower or the applicant has received. And you see there's some different funding different funding calculations, I should say, that will be available or are required for entities that either were in operation for all of 2019, who opened in early 2020, or who still haven't opened yet. So even these types of entities can get funding under this program as well. And the SBA has said that they may release additional formulas. Again, we're waiting to see once this actually gets rolled out. We've just seen some preliminary information, some FAQs, as I said, the application, but we'll see as this gets rolled out, but it should be fairly soon. And one of the things that we've seen in the SBA, initially we thought applicants were going to have to obtain a Dun & Bradstreet number or a DUNS number, as well as register for SAMs, which is a governmental requirement in order to obtain governmental grants, but that is not the case. So if you've done so, it's fine, but you will not be required to do so. Okay, on to the next slide. We see here that the use of proceeds, and now they've expanded the covered period actually till March of 2023. So companies will have plenty of time to spend these funds on the items that are listed here: payroll, similar to PPP, mortgage, rent, utilities, food and beverage expenses, supplier costs, operational, sick leave, and maybe some other designations that the SBA determines once the program is rolled out. But borrowers, or I should say applicants, should know that if you haven't used the funds on these costs that are listed above by the date, you will be required to repay it. And I don't know how, or we don't know how that will be. Is it in the form of a loan? Do you pay it back right away? Is it over time? So we'll see, but hopefully you will, if you do receive funding, we'll be able to spend it in the allotted period. Okay, as I was saying, we have posted a draft of the application in our chat box. It's worth taking a look at if you do have if you are interested in applying for this, but you'll see it asks for owner information, form of organization, if you're government owned, what type of business, a computation of your gross receipts. There's a lot of information that you'll need to provide, so you definitely want to take a look at this. It is possible that the application changes, but at least have a look and see if there's any information that you think you can start gathering now. Also, as part of the application, which can be done electronically on the SBA site, you'll need to fill out an IRS form 4506T, which basically gives third-party access to your tax return. And then you'll need to provide gross receipts and expense support. 2019 and 2020 tax returns or gross receipts. We understand that some of you may not have your 2020 returns ready yet, but it's something you'll definitely want to get started on. You won't need to submit that initially, but eventually you will, because it does ask for 2020 purposes what will be the gross receipts on your 2020 tax return. So definitely, at the very least, start taking a look at this and getting the information ready for when it is time to go live. Okay, and some new information that came out specific to inns as well as brew pubs, tasting rooms, tap rooms, breweries, wineries, distilleries, or bakeries. You will need to document that on-site sales to the public comprise at least 33% of gross receipts for 2019. And inns will need to do the same thing. So this is saying at least a third of your gross receipts will need to be for on-site sales. So just another stat that these types of entities will need to go through. So something to keep in mind as well. And just here some other considerations. You'll need to make the good faith certification that we saw as part of the PPP process, basically saying that the uncertainty of the economic conditions make necessary the grant. So basically, here's why we need the loan, and understanding restaurants and shuttered venues, which we're going to get to next, have been hit very hard as part of this pandemic. So some haven't been able to open to capacity or are still only able to do outdoor dining or delivery. I mean, we see that here in New Jersey, some of these restrictions have been lifted, and indoor dining and whatnot is starting to become more available, but that doesn't mean that your business didn't suffer in the past. So back to these cross-funding eligibility requirements, we saw you cannot have applied for or received the Shuttered Venue Operator Grant. So those two programs are mutually exclusive, so that's could be viewed as a detriment. But the next two are definitely benefits in that these grants will not be included in gross income, and the expenses are tax deductible for the recipients. So similar to the PPP, EIDL advance, you do get basis for this, so it's included in tax exempt income for S corps and partnerships in terms of their shareholders and members respectively. So that is an there for these programs as well. And lastly, eligibility for permanently closed entities and or bankrupt entities that don't have a plan of reorganization. They may not be able to get funding. As of now, it's not in the program. So if that is you, definitely something you're going to want to take a look at and see if you're permanently closed, it may not apply, but if you're a bankrupt entity and you're in the process of getting your reorg plan together, maybe something you want to step up and try to get done sooner rather than later. Okay, so as I was saying, the Restaurant Revitalization Fund is hitting one of our hardest hit businesses for restaurants and other types of entities that essentially serve food. Another one that's been hit very hard and something that hits me because I actually like to go see these types of shows is the Shuttered Venue Operator Grant. And this is something that came back and came into effect all the way from the Consolidated Appropriations Act that was released at the end of December 2020. And we've been waiting a rather significant amount of time for this to actually be rolled out. The program initially had $15 billion inside the program. There's been some adds to it. It's now up to $16.25 billion, and similar to the Restaurant Revitalization Fund, this program is administered by the SBA. So while we are waiting for the Restaurant Revitalization Fund portal to open, the Shuttered Venue Operator Grant portal actually did open about 2 weeks ago, but there were technical difficulties and the site was shut down shortly thereafter. So we know that you applicants out there are itching to get this done as well. The portal is expected to open again shortly, possibly even tomorrow. So we've been told that the portal may open as soon as tomorrow, but hopefully no later than next week. And then these types of venues can get their funding as well. And here's a recent change, again, back to this cross-program funding eligibility. Businesses that apply for PPP loans, essentially for the second round or the second or third tranche of funding, if you will, after December of 2020, and that got a PPP loan can also apply for a shuttered venue operator grant. So those are no longer mutually exclusive, but I believe it may be reduced if you do get both. So something that you'll want to check on. Eligible entities, they must have been in operation as of February 29th of 2020, and they include live venues, theatrical producers, live performing arts organizations, museums, zoos, aquariums, motion theater, talent representatives, and businesses owned by these types of entities. So the eligibility is somewhat condensed, but still there is an opportunity for funding here. So hopefully eligible recipient or eligible applicants can take advantage of this funding source. Okay, the grant amount, and some of this may be repetitive, but just want to make sure it's fresh on everyone's mind. It's determined as to whether or not you were in operation as of January 1 of 2019 or began operation on after that. And it's going to be basically a component of your 2019 gross receipts or an average thereof. And you see it's the lesser of those are 10 million. So the maximum grant will be 10 million. And similar to the Restaurant Revitalization Fund, we see that there is priority given here. This priority, however, is determined by entities that had the greatest percentage of revenue lost between April and December of 2020, so of last year. So we see a 90%, 70%, and then 25% threshold, and then there may even be supplemental funding. So if you think back to the first slide, there's 16+ billion in there, which again is an exorbitant amount of money to one person. But when you think about all the venues that may have been shut down, it may not be enough. We'll have to see, and hopefully, if the funds do run out, that these funds would be replenished as well. But for impacted applicants, definitely you'll want to get your applications in and make sure you're paying attention to the latest and greatest in terms of where the portal stands. Okay, so similar, again, the funds can be used for a myriad of costs here: payroll, rent, utilities, mortgage, debt, not including the principal, worker expenditures, state and local taxes, lease insurance, and other funding sources as well. So there's a lot of different ways here to these funds to meet the requirements of the program. So something to keep in mind. But as the next slide, we'll see some things that you cannot use the funds for: real estate, certain loans, investments. They really want you to just be funding payroll and making sure you can operate your business, and rent, debt, so on and so forth, not necessarily making investments or expanding your operations. And here's just some record keeping requirements for those who do apply and receive the funding in terms of how you should maintain your records. So definitely a lot to pay attention to. We're following up on this, both the Restaurant Revitalization Fund and the Shuttered Venue Operator Grant, but definitely reach out to us if there's anything or any other information that we need. And I'm going to turn it back over to Todd first for, I guess, poll number 4, and then some final thoughts. Todd?
Okay, so we're going to do the poll number 4 first, and then we'll do some final thoughts and close it out. So number 4. All right. What date will Saks hold its webinar to discuss the proposed estate and tax overhaul coming down the pike? April 23rd, April 27th, April 28th, or April 29th? So this is the big webinar that is going to pretty much explain to us how estate taxes are going to work in the future, what the proposed law is, and what the big changes are. So is it the 23rd, 27th, the 28th, or the 29th? Which is it? And by the way, if you haven't signed up for this, you really should. I think we have 650 people signed up, and I'm not quite sure what you get if you become the 777th person, but you should sign up for this exciting webinar, 23rd, 27th, 28th, or the 29th. Keep going. Give you a few more seconds to do this. Countdown. 5, 4, 3, 2, 1. And it looks like most of you have it right, April 29th for that webinar that's coming up. You can register for that webinar right on our website. So a few final thoughts before we close this out. There's just a couple of questions came in on the form 3509 and 3510, which relates back to the questionnaire, the loan and necessity questionnaire. One was, when do I have to send in this questionnaire? And the second is, well, who actually sends it to the SBA? And I just wanted to clarify this in the few minutes we have left. First, it is in the instructions that the form is to be completed. It's due to the lender servicing your PPP loan within 10 business days of receipt from your lender. So the way I translate this, folks, is that the lender is giving you the form to fill out, and when they give you the form to fill out, you have 10 days to return it. That's the way the instructions read. I don't know what's happening in reality. Maybe you could share those thoughts with us as far as your experience. And then who's really supposed to be submitting this to the SBA? According to the instructions, it says within 5 business days after you provide a complete form with all the required responses, supporting documents and signatures and certification, the lender servicing your loan is required to upload the form and documents to the SBA PPP forgiveness platform and separately input your responses to each question into the web form available in the platform. So in the instructions, at least, it says that it's the lender. So if you've been told by the lender that you're supposed to do it, well, that's not what the instructions say. So there's a whole lot of more information we could talk about concerning Form 3509 and 3510 that we didn't get a chance to speak to. If you have any questions, please reach out to us. Steve, do you have any other comments, or Gina, before we wrap it up?
Well, Todd, actually, I see, I'm just going to go through, there's a couple other questions in the questions pane, so try to answer some of those if we have a few minutes.
Yep.
One of them, I believe, relates to the Restaurant Revitalization Fund. It asks, is a woman-owned business one that is certified women-owned or one that happens to be owned 100% by a woman? So if you look at the Restaurant Revitalization Fund application, it says owned and controlled at least 51% by women, veterans, and or socially and economically disadvantaged individuals. So that's where that definition is derived. So that's something to keep in mind there. And then another question came in about, do operations have to be completely suspended in order to claim the ERC under the full partial suspension category? Can a significant decline in revenue in one line of business qualify us for ERC? So, Gina, do you want to answer that, or would you like me to answer that one? Put you on the spot here.
Put me on the spot, it's fine. You can qualify for a partial suspension. You don't need a full suspension. So, for example, you could take 24-hour fitness gym with normally operating 24 hours. Now they were required to limit their hours to just say 8 hours a day. That would be a partial suspension. Same with a restaurant who could only have outdoor dining. That would be a partial suspension where they're allowed to stay open, but they can only do partial the operations, basically. And then the gross receipts, you test gross receipts for the company as a whole. Aside from any aggregation rules, if there's multiple trades or businesses under one EIN, you would still compute the gross receipts test using all the trade or business gross receipts.
Right, and from the affiliated entity perspective, if you have a significant decline in one entity and it's affiliated, that means you have a significant decline in all of them. So definitely something to keep in mind. It could be advantageous or disadvantageous depending upon your specific situation. So that's it for me. I don't have anything else to cover. If you're going to be applying for PPP, get your application in soon. The funds are dwindling. There is talk of them now that they've extended the deadline to the end of next month. They may put more money in, they may not. So definitely something, if you're looking at that funding, there's still time, but start working with your lenders because the deadline is approaching.
Awesome. Thank you, Steve. Gina, we're closing out the webinar now. Remember the April 29th 10 a.m. preparing for the estate and tax overhaul. Guys, I don't know if you know this, but there's been major proposals in changing the law. You really need to attend this webinar to learn it, unless you know it already. And then also, as far as more resources, you can always reach out to us in the COVID-19 at sacsllp.com webinar, rather email address, and go to our website for the COVID-19 Resource Center that's found on our sacsllp.com to register for webinars and ongoing information and resources. So be looking forward. We will be having another recovery update. We don't know when. We're trying to do this at least once or twice a month. And as information comes out, we are also sending it out through our e-blasts and our new podcast. So wishing you all a great day. It's a beautiful day. Get out there and see you next time. Take care.